I'm going to start off with my State of the Union or State of the Markets, if you will, first. All right, so the VIX. There's some really interesting stuff going on the VIX. And on this chart here, we're not going to spend too much time on this blank chart, okay? I want to bring this over to a chart of the VIX that I've kind of been following with for a while. So here it is. So I prepared some analysis in advance. So everyone, please type a Y if you see my chart of the VIX. Okay, so everyone sees this VIX chart and you can see this analysis I've done in advance. Now, I'm just going to take on this daily chart a big like history tour with you, okay? Big picture. So we had a low in the VIX that we have not returned to since November of 2021. That's a long time ago, okay? Rallied beautifully into the RSI power zones, bull resistance power zone, peaked in December of 2021. Now it got super volatile after that, meaning it made these big giant moves that correlated with market moves, right? Because when the VIX is rising, generally the market, like the S&P, the Dow are falling. When the VIX is falling, the market's rising, etc. And what we want to look at is this overall giant pattern that formed and where we might be now. So there was this trend line that was back here that was useful to me. I'm going to just change the formatting on it because it was very useful here in the spring of 2022. Then we briefly broke below it in August 2022. So you may remember, guys, that this was like a fake out on the SPY where back in August of 2022, we all thought, oh, everything's good. We're back to whatever. Nope, didn't continue higher from there. Okay. And then we see that the VIX took off until October. Makes sense with our October low on the SPY and other markets, and has been trending lower since, but is doing some interesting things now. So what I want to show you is that in the big picture, based on a giant advanced forecast, okay? When I say advanced forecast, I mean, it's not the typical techniques I use in loss forecasting. It is way bigger of a cycle or more complicated. But based on that, we have reached the price target, if you will, of the loss forecasting. So everyone else, can you please type a Y in the chat if you see how we've come down to that lower forecast line? So my circle, my cursor circling around it, okay? Now, that was a huge helpful magnet, okay? Along the way, we had other ones like this one for a high. And now what's happening is there's a recovery off of the February 2nd low, just like the market's been moving lower choppily off the February 2nd high. But the VIX is still bound by the bear resistance and bear support power zone on the RSI. And it's come back into price probe middle, and it's got a nearby price low that's providing support. Within all of that, so if I just zoom in even more, we've got 50% that's been retraced, and look at how it's just dancing around it, okay, for the past couple of days. So here's the interesting thing. We now, with today's action, have an inside bar. So when you have a range of action of a candle that's within the prior day's range, this starts to give you like a clear boundary that you can watch, okay? So what I'm seeing is that we're really at a decision point. I don't know yet which way it's going to go, but I want to prepare you for either. So if the VIX gets above yesterday's high at 2137, I think we are pretty clear on a journey back towards 23 to 24 on the VIX, which would mean falling prices in the SPY and the Dow and other markets. Guys, type a Y if you follow that, okay? If the VIX breaks higher, I think the broader market will continue lower. Okay. If we break below yesterday's range, that's my proper intonation there, then you can see I have this price low marked off that is giving me a zone of support looking like 1875 or so. And then it can come in and see if a shorter term forecast might help with that. So the forecast would actually be for price level ahead of that, I personally don't think that that will be fruitful because we've already run out of the time on that forecast. I think it's more likely that if the VIX gets below 2010, it falls to like 1876. Okay. So I just wanted to bring your attention to that because, like I mentioned, we were at a key level here, coming to the midpoint of this very important price spike. We're recovering higher after this long-term forecast, but still bound by the bear zone. So now you have a small, tight range to watch on the VIX to navigate your trading ahead.